Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking FX and a rather exciting few days in the euro. We have a negative week for the euro, again, 3 of the last 4 now, and actually if you stretch it out even further than that, it's about 8 of the last 10 weeks that have been down in the euro as the euro continues to collapse, recovering from one of the worst days that it's had, actually the worst day open to close that the euro has had since the Brexit vote, but it did recover today 15 basis points, or said differently, just under 1/4 of 1 percentage point to get back above 116. Now, all of this came off of the Draghi statement yesterday, not necessarily the ECB statement post-meeting. That wasn't so bad. We actually did get a little bit of a move down there, but it was a controlled move down given that the statement mainly said that rates were going to stay low and that the QE program would be ending. But then in the introductory statement to Mario Draghi's press conference, and I know this was yesterday, but it's still the most important factor in not only the euro, but the overall currency markets today, Friday. He stated in the introductory statement to the introductory statement prior to his press conference that rates were likely to stay untouched. As a matter of fact, they were going to stay untouched until summer of 2019. He even pushed back on a reporter's question when a reporter asked him, does that include your September meeting? And he said, if we would have been talking about September, we would have said September. They're going to stay at negative 40 basis points. That's an important point. They're going to stay negative until the summer of 2019. Given that we're not even technically in the summer of 2018 yet, which begins June 21st, that's over a year that the euro rates are going to stay negative. Now, in that time period, that's going to encompass at least 3, but likely 5 U.S. Fed rate hikes. So that's a big spread between the euro and the U.S. dollar that is not fully priced in my opinion. There's probably going to be sellers of rallies in the euro as the data comes out. We did get some European data overnight last night, and that was the final reading on the May CPI for the Eurozone, and it stayed at 1.9% year over year. I'm sure the ECB knew that. I'm sure they would have liked to see it go up above 2%, and if it had, maybe their statement would have been a little bit different, but it did not. When you look at the overall chart on the ECB, you could get in the euro, you could get a little bit of recovery in the June futures contract, but it's likely that that would be sold given the broad divergence of the two economies and the views from their respective central banks. This is Bob Iaccino talking about a very weak week in the euro currency from the CME Group trading floor in Chicago.